Banking Regulation Act 1949. The Banking and Regulation Act was enacted to safeguard the interest of the depositors and to control the abuse of power by controlling the banks by means necessary and to the interest of Indian economy in general. There are many provisions of Banking Regulation Act 1949 that we are going to talk about in this video. What was the objective of Banking Regulation Act? The provision of Indian Companies Act 1913 was found inadequate and unsatisfactory to regulate banking companies in India. Therefore, a need was felt to have a specific legislation which has comprehensive coverage of banking business in India. Because of which, due to inadequacy of capital, many banks failed, and hence, prescribing a minimum capital requirement was necessary. The Banking Regulation Act brought in certain minimum capital requirements for banks. One of the key objectives of this act was to avoid cutthroat competition among banking companies. The act was regulated the opening of branches and changing of location of existing branches to prevent indiscriminate opening of new branches and ensure balanced development of banking companies by system of licensing. To assign power to RBI to appoint, reappoint and remove chairman, director and officers of banks. This could ensure smooth and efficient functioning of banks in India. To protect the interest of depositors and public at large by incorporating certain provisions with respect to prescribing cash reserve and liquidity reserve ratio. This enables the banks to meet the demand of the depositors. It provided compulsory amalgamation of weaker banks with senior banks and thereby strengthens the banking system in India. It introduced few provisions to restrict foreign banks in investing funds of Indian depositors outside India. It provided quick and easy liquidation of banks when they are unable to continue further or amalgamate with other banks. Now, this act applies to the following categories of banks: nationalized banks, non nationalized banks, cooperative banks, to the extent specified in the Act. Now, what is the business of banking companies? In Banking Regulation Act 1949, Section 6, it provides a list of activities which a banking company may engage in the business of banking. The main functions are as follows: to act as an agent of any government or local authority or any other person carrying the agency business of any description but excluding the managing agent or secretary and treasurer of a company. Managing the public loan and private loan and solving issues respectively. The ensuring, guaranteeing, underwriting, participating in managing and carrying out of any issue public or private of the state, municipal or other loans or shares, stocks, debentures, stock of any company, corporations or association, and then lending the money for any purpose. It may carry on the event of guaranteeing business, managing, selling, and realizing any property which may come into the possession of the company in satisfaction of its claims. It can acquire, hold, and deal with any property or right, title, or interest in any such property which may form the security for any loan or advance which may be connected to any other of security. Undertaking and executing trust, undertaking the administration of estates as executor and trustee, establishing and supporting of associations, institutions, funds, trust, and conveniences calculated to benefit employees for ex-employees of the company. the acquisition, construction, maintenance, and alteration of any building or works necessary for the purpose of the company. Selling, improving, managing, developing, exchanging, leasing, mortgaging, disposing, or turning into account, or otherwise dealing with the property and rights of the company. Acquiring and undertaking the whole or the part of business of any person or company, when such business is of a nature of enumerated or described in the Act. Doing all these things are incidental or conducive to the advancement of business of the company. Any other form of business which the central government fixed in the official gazette and specified as a form of business in which it is lawful for a banking company to engage. Now, the banking regulation also regulates the agency services for carrying and transacting guaranteeing business on behalf of its client, collection of bills, securities, etc., purchasing and selling of shares, bonds, debentures, etc., on behalf of constituents, negotiating of loans and advances, mail transfer, etc., and many more agency services are grouped as follows: non fund business, collection of instruments and securities on behalf of customers, portfolio management or merchant banking, facility of remittance of funds, money exchange business as authorized dealer under foreign exchange business, other agency business on behalf of government or local body, factoring services, special purpose vehicle services for securitization of assets under Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act, collection of taxes on behalf of the people, collection of different dues of the people like telephone, electricity, municipal taxes, etc. Now, what are general utility services? For providing safe custody facility to its customers for keeping their valuables, providing the facility of safe deposit vault under the lease agreement to its customers for keeping their valuables, technology based utility services like telebanking, mobile banking, online banking, demat services for security trading, ATM service, etc. Consultancy services such as ECS services for payment of different dues to the people, payment of pension, payment of salaries of the employees. In conclusion, some of the activities mentioned both under agency services and general utility services are of new generation activities, particularly after the reforms in financial sector and growing adoption of technology-based banking. These are the important facts that are given in the 6th section of Banking Regulation Act 1949 regarding business of banking companies, etc. Thank you.